The global economy. So how's it performing, and what's the outlook for the rest of 2024? Hi, everyone. I'm Sean Calebson, filling in for Anna Naidu, and this is The Heat. Well, as we head toward the end of the year, what is the state of the global economy? In China, economic recovery momentum continues, with recent stimulus measures expected to have a further positive impact. Meanwhile, here in the United States, new economic numbers released Friday, and they were encouraging. And the economy is a major issue in the upcoming presidential election. However, conflict in the Middle East is raising concerns about rising oil prices and what the overall effect that could have on the global economy. Okay, we have a panel with us here to talk about all this. Joining us from Oregon, Liang. She is chair professor of economics at Willamette University. Also with us from New York, Anthony Chan, former chief executive economist at JPMorgan Chase and Company. And also joining us is Ryan Patel. He is the Global Business Executive and Senior Fellow at Claremont Graduate University. I want to thank you all for joining us. A lot to get to. Jan, I want to start with you. For so long, China was really the economic engine, growing at double digits for all those years, really decades, and you saw all the positive output that it really had on that country, lifting so many people out of poverty. But it's a different world now. Things have slowed, and China has really changed its focus to more high-level, high-tech innovation and less from the manufacturing or providing materials for other countries. So looking at that, we know that the government just fired its big stimulus cannon recently, and that had an instant impact on the economy. Markets soared, both within China and outside as well. And it also is focused a lot on the ailing housing market. So kind of take the pulse of the country, if you will, for us. Tell us how China's doing, how important this big stimulus measure was, and what you expect the short-term and long-term effect is going to be.
Right. Good to talk to you, Sean. So first, I think, let me preface my comment. I think you're right. China's growth is slowing down. So it's deceleration and a conscious choice away from the high, speed growth to more high quality growth. But even at the speed of, 5% of growth, and given China's economic size, China is still expected to contribute to 30% of the global growth. So China still play a very weighty role. And as you mentioned, in the recent months, I think we have seen some deceleration of growth, especially the property market in terms of the sales, the price, and also, the investment have been going down. And we are also seeing relatively weak retail sales growth. And so I think all of these prompt the policymakers to come up with the stimulus packages. So far, the efforts have been mostly in the monetary side and financial side. So you mentioned some of the monetary policy that includes RRR cuts, interest rate cuts, reduction in mortgage payments and mortgage down payment requirements, and so on and so forth. And I think the more sort of unprecedented support comes from the both the relending facilities and also the swap lines that would allow direct support to for the equity market, so purchases of stocks by financial institutions and also by companies. So far what we have seen is the markets have reacted very strongly, right? In the past week, I think we have seen the stock market rally by over 20%. And so that is a good sign. And also the early data indicates that the Golden Week has also seen, very high records numbers of trips, like close to 2 billion trips.
Wow.
And a lot of the indicators, yes, will show that the consumer spending, especially tourism spending, is likely to go up as well compared to last year. So I think the immediate reaction of the market is very strong and positive. But of course, the question is, will this continue? So I think for one, it will in some sense, because even though the arbitrage trading opportunity has been priced in, but people are still thinking, this is the market that has been undervalued and also underweighted in a lot of portfolios. and also for diversification, right? So people are going to come back to the U.S. To the Chinese market. But I think going forward, we're expecting to see more stimulus coming from the fiscal side. And I think that is very essential. And that really would play a very vital role in not only addressing the short-term growth challenges,
right,
but more importantly, the long-term structural issues as well.
Okay, Anthony, here in the United States, some really positive economic news today. I don't think anybody saw the numbers coming that did come out in terms of the economic news, the economy adding more jobs than expected for September, the unemployment rate also dropping. So I read one interesting quote. It said, for those people who thought we couldn't have growing wages, stable prices, and low unemployment, we've proved them wrong. Your take on the information today, and also the market has been toying with record highs in recent weeks.
Well, Sean, what these numbers really tell me is that it puts a nail in the coffin to those people that thought the U.S. economy was in a recession and that somehow the data will prove them right over time. That doesn't mean we won't go into a recession ever, because that's not the way things work. A business cycle, you have expansions and then you have recessions. But for the moment, these numbers are very impressive. And it's not just these numbers. When you look at the Atlanta Federal Reserve, which is a pretty good barometer of what GDP is likely to do, they're still forecasting 2.5% growth for the third quarter as of today, and that's a pretty impressive number, and certainly doesn't look like anything resembling a recession. We got the GDP revisions and the gross domestic income; all those were revised higher, and these numbers today, especially the unemployment rate coming down, was impressive enough to tell me that the labor market is fairly strong at this juncture. So I was pleasantly surprised by the strength, which, as you said, Sean, the 254,000 was more than 100,000 stronger than the consensus was expecting. So we are creating jobs, and with jobs, consumers will spend.
Okay, we have a fourth member, our happy little international panel here. I want to bring in John Quelch. He is the Vice Chancellor of Duke Kunshan University and from Los Angeles. Thanks so much. So we had a little ghost in the machine. It's good to see you, my friend. From a global perspective, we talked about the two largest economies in the world, but from a global perspective, as we head into this final quarter of the year, what do you really see for the overall economy of the world, the global economy? How do you see it sort of wrapping up this year?
So I think, Sean, thanks for the introduction. You know, the US and China have traditionally been the two principal drivers of the global economy. As Liang indicated, the Chinese government has now stimulated significantly, and although the stocks are not back to where they were historically in China, the 20% rebound is pretty impressive. China is still the major goods producer in the world and ranks number 4th in services trade. It's still a very important component, and is driving to deliver growth commensurate with its responsibility, not only domestically, but to the international economy. At the same time, the U.S. growth, as Anthony has indicated, at 2.5% is above, I think, what many people would have predicted at this point. And that is also going to be very favorable for the international economy as well. Europe still continues to be sluggish. You know, with growth rates around about 1% to 1.5%. And that perhaps is the biggest drag on the global economy at this point. There is selective buoyancy in some of the emerging economies as well. India still is very robust, but these are relatively minor players in terms of the broader scheme of things. So things are looking up in China. Things are looking relatively good in the US compared to expectations. And so all of this bodes well for the global economic picture.
Okay, Ryan, I think if we've learned one thing in the second half of this year is the global economy is resilient. But there's an important election coming up in the United States in the next 4 weeks, and that is going to have a huge impact on how the U.S. moves forward as an economic machine, and as we heard our guests talk about, the way the U.S. goes, it really takes the global economy with it to a large degree. So let's talk about the economy as a huge issue for the November race. Your thoughts on what voters in the United States are looking at, and what's your takeaway as we move toward this deadline, I guess it's an election rather, coming up in just about a month?
I think you hit it. It's been a daily resilience for the U.S. economy. You talk about the port strike, you talk about the jobs report that just came out. I don't want to say it's up and down, but the voters are looking at this. Why? Because they're looking at the pressure on prices. At the gas station, prices were on track to fall below $3 on average by the end of October. Now with the escalation in fighting in the Middle East, will you see higher prices? That's on people's minds. We saw, even with the wage gap, kind of starting to kind of close that gap, but still it's not happening right away. Even with the interest rate and the 50 basis points the last meeting, it's still not in people's pockets. They're not feeling it just yet. So right now it's a promise of what it's going to look like over the next couple of months. And that you can't really kind of go away. Yes, there's a great jobs report number and it surprised everybody, which is great, but that doesn't really kind of have people's attention right now because they're still looking for jobs, right? And so I tell you that because this is the type of news you're going to be listening and hearing about going into November. And I think that's where people want to see and feel that difference. And can they do that will make a big difference in who wins in November, because the economy is on everybody's mind.
Yeah. Liang, you and I've talked before. I had a nice month-long trip to China back in March, and I got to see firsthand their electric vehicles, their push toward technology, and was just blown away by really how well they're doing and how inexpensive those vehicles are. Now, that said, if Donald Trump wins, he's basically already said he's going to double down on tariffs. Already hit China with 100% tariffs, but it doesn't stop there. He wants to have tariffs on vehicles that are made in Mexico coming north of the border, wants to have tariffs basically pay for so much of what he has planned if he wins this election. I want to talk to you about your thoughts on the way China is viewing these tariffs, what it does, not just for that nation, but the global economy overall, because we've really seen follow the leader. Canada now has instituted the same tariffs, and the EU has moved in that direction as well.
Right. I think the way China sees it, of course, this is the rise in protectionism around the globe. And as you just mentioned, Chinese EV industry has really taken off and has become really formidably competitive. And I think that's one of the reasons why many countries are erecting these trade barriers and trying to, keep Chinese EVs at bay to protect their domestic interests. I think from where China stands, I think for one, it's important that these kinds of green products, green capacity, as the ambassador, the Chinese ambassador to the U.S. said, this green capacity is not in assets, it's in the global demand is, really high. And this is not really overcapacity in China's part, but it's really over anxiety on the part how to cope with China's competitiveness. So I think, for China, they will continue to develop EV. Domestic market is huge. The global demand for EV is projected to grow to 45 million by 2030. And China's current capacity to produce EV is about 8.1 million last year. And this year is probably going to hit 10 million. So I think, there is a healthy supply, and there is also the large demand for these kinds of products. And I think, for the United States, keeping the Chinese EVs away doesn't necessarily help to boost their own EV production, right? It really depends on if the big auto three are going to get their act together and really start to invest and produce on EVs. And I think on the other hand, it's really remarkable, when we're talking about climate change and the solutions to, green transition, I think these kinds of protectionism policies will simply slow down the process of green transition. Also, make the cost much, much higher than necessary, right? So when you look at the EVs on average, it costs $55,000 in the US. It's about $33,000 on average in China. The entry price is much lower in China than the United States. So I think it's very important to think about some sort of win-win solutions, not only to accelerate technological developments in the green space, but also really think about how to cooperate on fighting climate change on that front.
Good stuff there. And I think before we go any further talking about the EU and its tariffs, I think I want to adequately state that the China's Ministry of Commerce has said time and again that it really opposes these measures, and it has urged the EU for some time now to try to resolve trade disputes through negotiations, through discussions, and clearly the EU split to a very large degree on how to move forward on that. We'll talk about that in just a bit. But Anthony, I want to talk to you more about tariffs. And if the U.S. economy was a patient, where was it 6 months ago, and where is it now?
Well, I think the U.S. economy 6 months ago was in a situation where there was more uncertainty with regard to the economy. There may be more uncertainty, geopolitical uncertainty today, but in terms of the economy 6 months ago, there was a lot more uncertainty as to whether or not we would slow down. In fact, the general consensus view was that the economy was slowing down, and that's why the Federal Reserve should start lowering interest rates. When the Federal Reserve decided to lower interest rates, there was even the view, and that wasn't 6 months ago, but it was recently, that somehow they were too late by lowering rates, and that's why they lowered rates by 50 basis points. Now, of course, with this employment report and other data, not just this one, is suggesting that no, the Federal Reserve was not too late, and in fact, the economy is doing well. The reason to lower rates is not so much to help the economy, but rather to preserve the good news. I'm on my way to Asia, and I'll be there next week doing some presentations. And the early read from people that I'm talking to are very impressed with the strength in the U.S. economy. And they're also excited about what's happening in China, as Professor John Liang has said, that they're stimulating the economy. This is going to be good for not only China, but it's also going to be good for the global economy and hopefully the other global participants also.
Yeah, that said, I can promise you your number one question is going to be who's going to win the presidential race. And I think that's important. The reason I ask you about the U.S. economy as a patient, how important is November? Tell me where you see things going if Trump wins, if Kamala Harris wins, because Trump has made it clear he wants to have tariffs on vehicles that come into this area. He was at John Deere, a big farming company here in the United States that really depends on selling huge machinery to farmers. Farmers are hurting, and Trump sat there and told the farmers, if you build these John Deere vehicles in Mexico, I'm going to hit them with big tariffs coming back into this country. Not what they wanted to hear.
That's right. And the reality is when you talk to Trump officials, a lot of times when he talks about ending federal income taxes and replacing them with tariffs, and you ask them that, they say that, no, these are all things that Trump puts on the table as a negotiation ploy, that somehow when he gets elected, that maybe these things won't really happen the way they are. If you add up all the tax cuts and how much it will cost over the next 10 years, and I'm using nonpartisan estimates, they will cost as much as $11 trillion. Never in the history of the United States have we seen a presidential candidate talking about increasing the deficit by as much as $11 trillion because of tax cuts. So that is going to be something that voters are thinking about. And on the other hand, the other candidate, yes, he will increase the deficit. Some of the estimates, nonpartisan, of course, it will be closer to $2 trillion. But the reason why it's not going to be as much, because it won't just be tax cuts. There'll be some tax increases. So it's a little bit more balanced. So normally I would say $2 trillion is still a lot, but when you compare it to $11 trillion, it's a pretty small number.
Okay, John, let's move outside the United States now, talk a little bit more about the EU and its massive market there, because the economy has been flirting with a recession all year, but there is still potential for growth there, especially in 2025. What do you see?
Well, there is potential for growth, and if you look at the UK, for example, you'll see that the growth forecast for this year is actually pretty strong relative to the rest of the Eurozone. And one of the reasons for that is that the UK economy has been so weak in 23 and 22. So when you look at the growth in 24, what you're looking at is a compensation to some degree for laggard performance in 22 and 23. You know, certain of these economies, such as Germany, of course, is very dependent upon global trade, and therefore the health of the global economy has a very, very strong bearing on demand for German exports. I do want to just make one comment, if I may, Sean, on the EV issue. I was surprised to see that the proposed tariff by the EU is as high as 50%. I really do expect to see that pressure from consumers internationally to be able to access high-quality Chinese EVs at competitive and lower prices is eventually going to prevail. And I recall 30, 40 years ago, the case of the Japanese auto manufacturers trying to come into the US and Europe. All of the same arguments prevailed, all of the same responses in terms of various tariffs and non-tariff barriers being erected. And eventually the Japanese were able to come into the US by building their own manufacturing plants in the US. And I do hope that the blockages against Chinese capital coming into the US that currently exist are going to be relaxed so that eventually this issue can be solved by giving US workers jobs in factories that are producing Chinese branded EVs.
Yeah, John, I think it's also worth mentioning that the EU and China are going to continue to discuss this moving forward. But to your point, 10 EU nations backed the tariffs, 5 opposed, including the largest economy, Germany, and 12 just abstained from voting on it. So it's going to be interesting moving forward. Okay, Ryan, sorry, I meant to get to you a lot earlier. I apologize. But you're in California, a state that has huge economic pull with the United States, obviously, but China. How important is it for California and the U.S. To have a very good, very solid relationship, especially working toward finding a solution about their trade woes?
I mean, as much as there's this rhetoric, it's a must, right? You saw Governor Newsom go to California, Governor Newsom go to China, and create this dialogue and partnerships. When you talk about tariffs, it's a negotiation tactic, right? That's what everyone's been saying, and so that tool then affects businesses in California, obviously in the U.S. is dependent and interdependent with China, especially on all kinds of goods. And especially when it comes to EV, it's very interesting when you're building the infrastructure. So I would say in California, and just not California, the US, there needs to be this dependency. And I always feel like whenever we talk about this, the tariff piece, there's always needs to be compromised on to get to the next thing. And so we've seen this from the trade wars, right? It was kind of a back and forth. Again, I know it could be starting a new conversation, but both the U.S. and China and the businesses that do business in both those places, and that includes the consumers, they need each other. It's clear for that aspect, and prices have to be managed. Otherwise, there's going to be a lot of disruption. And I think when you have economies that are trying to grow right now, that's not what you need, right? You need it to continue to accelerate and grow and catch up to what pre-pandemic numbers are. And so I don't see that kind of, hopefully not stunting. It needs to catch up. And that's why I think these are healthy conversations. But I feel from a business perspective, we need more solutions. Yeah. And I think that's what hopefully the goals are going to be.
And Ryan, if I can also follow up, I think the U.S. just dodged a bullet, if you will, on the ongoing longshoreman strike, which could have been very punishing. They've agreed to move forward on this and work with a wage increase of some 61% and try to work out the elephant in the room, do something about automation. Your thoughts about that?
This was a big deal. I know this could have caused actually global economic crisis too, because if this would have went longer, we would have been in the billions in loss in GDP actually for the U.S. I think this is a conversation that's not new actually. We've seen this in the U.S. with other ports last year on the West Coast. We saw it with the auto union as well, and technology in general. And I think I don't know if you're making this point, but I'll make it for you. Right, this conversation when it comes to technology and labor force and workforce and how you manufacturing goods is something at the forefront too when it comes to the relationship with China and the U.S. too. So I think this was needed. It needed to be resolved quickly, and it did. But I don't say it's only the beginning, but I think we're going to see other industries go through these things as well. And it's going to be a conversation that does have a global impact, not just a U.S. impact when it comes to that. When you're talking about billions of dollars, especially when it comes to supply chain. Okay, and
Liang, we've talked about the high quality production that is coming out of China and is really going to be coming out in the coming years. We, of course, focus on the EVs. You also talked about climate change. We just had a huge environmental disaster here in the United States, Hurricane Helene. just punishing the foothills of Appalachia, nowhere near the coastline, so you really understand just how bad climate change is and can be moving forward. Kind of make that connection, if you will, for China and its high-tech advancements, why that is important and what it could mean for the rest of the world.
Right, exactly. I think this is precisely the point, which is we have this common greatest threat, which is climate change. And China has been invested very heavily in green development, green technology, green products. Last year, China invested $689 billion in the green industries, which is way more than the rest of the world. But again, I think, I'm usually an optimist, and I totally agree with what John said. But I think, this time is different. I think, with Japan, there's no heightened sort of global geopolitical sort of tension. But with China, I think now the rhetoric, it's not only economic impacts, but a lot of sort of so-called security concerns, right? The banning the software of the car, EVs, and somehow this would be violation of national security and data privacy. So I think it's a lot more on this on the horizon, right? In terms of the competitions, in terms of the political challenges, and so I think I deeply worried about this would slow down in terms of the green transitions, not just in the United States, but I think globally. I do think that it really takes, great resolve and also, I think, wisdom, right, for these two countries to overcome some of these barriers in order to cooperate together, especially for things like climate change, which I think is very clear that both countries and the global economy is increasingly impacted, right, by these negative weather events.
John, we don't have a lot of time left, and I wish we had more because I want to talk about the Middle East, the crisis there, and it is dramatically affecting oil prices, and that could completely spiral out of control. Your concerns about that powder keg and what it's going to do to energy prices?
Well, the per barrel cost today was $75, and I think the forecasts are that any further deterioration can send it quickly to 90. That's going to be great for energy stocks, domestic and international, but not so great for consumers at the pump. This is a source of concern, but at the same time, we have seen ups and downs in the Middle East and ups and downs consequentially in oil prices before that have not ended up derailing the global economy. Unless there's an all-out conflagration with Iran getting into the equation, then I think we have it factored in.
Okay. Anthony, I'm going to give you the final word. You got about 35 seconds. Tell me your concerns about the Middle East and how it could adversely affect the global economy.
Well, I think I agree with John. If it pushes oil prices towards 90, that would be a real significant problem. But we've already heard from the White House that they're urging Israel not to attack the oil facilities or refineries or production in Iran. Right. Remember that Iran is producing as much as 4 million barrels of oil per day. So to the extent that that production or that level of output is protected, I think that there is a ceiling on oil prices. But if somehow they're bombed, all bets are off. Okay,
my friend, I want to thank you and all of our guests. Thanks so much for that interesting, fascinating discussion. We need to leave it there. And thanks to you for watching another edition of The Heat. Once again, I'm Sean Caleb's in Washington, D.C.